Thank you, first of all, Mr. Amodeo, for joining us.
Well, the pleasure's mine. Thank you.
Great, thank you again. We'll just keep thanking each other. It'll be fantastic. But first question for you, as the head of Municipals at Western Asset Management, could you just tell our listeners more about your professional background and the focus of your firm?
Sure. Well, I'll start with the last part first. Western Asset Management is a fixed income asset management firm. For myself, it's pretty straightforward. I started at Solomon Brothers, which also was a fixed income shop. And
right.
Now being at Western, fixed income asset management firm, I guess you can say I'm fixed income.
As most people are.
Yes.
What is the business philosophy or investment strategy that separates Western Asset Management from the competition?
Sure. Western is a global investment firm. It's dedicated to fixed income. If there's a style attached to Western, it's a value manager. And we serve broadly three types of clients: mutual fund investors, institutional clients, and high net worth individuals. The hallmark of our firm, though, is really truly outstanding performance delivered to all three types of portfolios, whether it be mutual funds, institutional, or high net worth individuals. And it's through active management strategies and well-diversified portfolios.
Great. And then also, how does this investment strategy apply to tax-free municipal bonds?
So our investment process is identical across sectors, so it doesn't vary by sector. But with regard to public finance, we have an active management strategy like the rest of the firm, but we have a team that's dedicated to public finance credit surveillance. And so we believe that we could extract additional value from the marketplace, because when you look at the experience of that team, the depth and breadth of resources, they arrive at a thorough understanding of both the health and the risk within the sectors, across a variety of issuers, across a variety of sectors. And that combined with, say, the advanced analytics and the other resources that are available to us, we think all those factors combined offers a unique insight into risk and how to value risk, and therefore enables us to extract additional value from the market.
Wonderful. Also, what type of investor is best suited for a fund which emphasizes the advantages of owning tax-free municipal bonds?
Sure. So I get this question a lot, and if you pay taxes, you should own municipal securities. Is that straightforward? When you look at over even a short period of time, this has been a wonderful year for tax-free investors, but even over longer periods of time, if you even go back to the early 90s to date, municipal securities have outpaced their taxable counterparts with less volatility. Now, between points, there's been extreme moments. You talk about those high-profile credit stresses in the marketplace last year, the amount of cash flows that left the marketplace, lots of volatility in between, but point to point, they're offering compelling valuations. I would say that municipal securities, broadly, should be a cornerstone of your portfolio. It's not an asset class where you sell and you tactically try to get into and out of the tilt your risk. If you think it's in favor, out of favor, maybe reduce it slightly or increase it slightly, but it really should be the cornerstone of your portfolio.
Sure. And then also, what is your forecast for the sector in 2015?
Well, modest growth, modest inflation is the firm's view, and that's likely to be in the near term. If there's a change in our view, it might be improved economic outlook, but still inflation remain at bay.
Okay.
With that, the last 10 months have been pretty good to investors, and there's a strong rally in the marketplace. What you really want to do at this point is fade rate risk, reduce your sensitivity to interest rates, and as rates maybe march up, you still think they'll stay in a relatively tight band, then add some rate risk. But so despite fading rate risk, what we're doing is we're increasing our risk or exposure to spread risk or credit risk, because the credit profiles within the public finance marketplace remains strong and continues to improve. There are pockets of weakness, no doubt, the Puerto Ricos, the Illinois, the Chicagos, New Jersey, and so forth. But more broadly, the credit story is very much intact. And so fade rate risk, favor the credit risk, and I think you'll be doing okay.
Sure, I think so too. Also, why don't you tell us about the portfolio managers at your firm? What are some of the individual strengths in terms of investing?
So I'm so proud to be part of a team that, when you look at the experience, each manager in the public finance group has more than 25 years worth of experience, and I think you'd be hard pressed to find a team that not only has that level of experience, but have really been working together for a number of years, and more than a decade for most of us. But more importantly, in addition to the years of experience, each of those managers can manage a wide variety of portfolios across the maturity spectrum, up and down the investment grade, below investment grade spectrum. So beyond the years of experience, they have a great deal of skill sets.
Fantastic. Also, what else would you like our listeners to know about Western Asset Management?
It's pretty straightforward. We're committed to excellence in everything we do, every aspect of our business, whether it's delivering outstanding performance or superior client service to all of our clients, the mutual fund investors, institutional clients, and high net worth individuals.
Great. And then one last question for you. In terms of this event put on by Pristine Advisors, how do you feel about the conference, and how do you feel that not only investors but advisors would benefit from coming here?
First, I'm so proud to be here. I'm really proud to be part of this event. Looking forward to a great conversation, and hopefully I'll get to listen to some of the other sessions. Information is key in this marketplace. The more information you have, the better off you can the better you can value your risk, and the better you can value your risk, the better your returns.
Great. Well, thank you so much for coming, and thank you for being with us today, and hope to see you next year.
Pleasure. Thank you.
Thank you so much.